Yes, sir. It's your boy B Hayes back with another one, guys. So Carvana, I know a lot of people is like, what in the world? Because Carvana crash has been insane, guys. And it's a lot of other companies that's about to experience the same thing. They already 70% the way there. They already 70%, 80%, some even 90% down from their highs that they were seeing in 2021 at its peak. So as we know, guys, Carvana had a worst day ever on Friday. It was already down over 70, 65, 70%, then crashed another 30% nearly on Friday, guys. So this is just insane. Carvana is down to what it is at $8 territory, I want to say. Let me take a look at Carvana stock. I'm going to share my quick opinion on exactly what's going on, guys. As you know, Carvana was definitely one of the plays that I was, getting in and out of. It's ended Friday at $8.95. So as we know, guys, this definitely was one of those plays, and I knew exactly what was going on with Carvana. I know it's not a profitable company. I know they wasn't making any money, but at the same time, they had the right business model at the right time, but now the wrong time has taken over. Meaning during the pandemic, while everybody was staying in the house, dealerships, people wasn't going to dealerships like that. Everybody was online shopping. What was better than buying your car online or going to a vending machine to get it dropped down to you? So obviously that ended up going sour as the world started opening back up. COVID's still here, but people don't talk about it anymore, and it's going back to a normal way of living. People is, experiencing life, want to go to the dealership, want to get out of the house, want to do these things. So on the back end, also people was not taking out on loans to get used cars because of the interest rates. And the car market also jumped up almost 30% during the peak of inflation. Now things have been coming down. You see Nike having sales, they having sales, the Bed Bath & Beyond having sales, they having sales, the cars on sales, houses on sale. Now everything is coming back down to reality now. And as we know, this was going to, happen. It was going to, take off like a bat out of hell. Everything reaches its peak, and then eventually it was going to, settle and cool down a bit. Of course, things are still going to be higher than they were before, because over, extended period of time, just a natural way of the economy, things is going to naturally, more money is going to be, here, people's going to have more money, and naturally the prices of things is going to increase. So anyways, guys, as we know, it's been crazy for Carvana, and a lot of other companies have the same thing in store coming for them very soon. Carvana isn't going to be the only stock, and it isn't already the only stock that have lost nearly, almost everything get gained. We know Carvana stock was at $300 plus just, a year or so ago, months ago, and now it's sitting at $8. So that's a crazy drop. But anyways, we take a look at it, guys. We know Carvana also lost like around 39%, 30% plus of its revenue, and they also is losing a lot of money on the back end, being for the fact that the way they structure their business model, they was all about numbers at the beginning, meaning they know it was a number game. Everything is a numbers game, but playing a numbers game with used cars can be very dangerous, because your inventory is not worthy of what you paid for it. Meaning when Carvana was just now getting off the ground and, trying to build up a crazy inventory, they basically was giving you way more value for your car than it was actually worth. They also, was losing money to having bad cars, and once you already lost the money on the bad car, you lose even more money by people having these cars insured or having a warranty on them. And now Carvana gotta, put a new engine in this car or do this. So now you done paid damn near, you done lost money on the car, a lot of money on the car. Instead of making a profit, you went a negative $5,000-$6,000 on the vehicle. Then the average vehicle profit for Carvana was about $3,000. And, for selling the car, you should have a bit more profit, slightly bigger profit margin than $3,000 per car on average. And of course, I know it's a numbers game. Carvana was in quantity trying to sell, if they sell 100,000 cars, 1,000,000 cars, and you do that by $3,000, that's a whole lot of money. But at the same time, you got to leave yourself room. You got to get a bigger profit margin, leave yourself room to have that cushion whenever things go sour, like they are now for Carvana. Because things is looking, it's looking ugly, guys. But as I say though, guys, it's more so of price action with me. I see exactly what's happening with Carvana. It's very, very dangerous stock to touch. But at the same time, I've seen this happen before. I'm pretty sure it's going to happen again. Regardless if Carvana, come back with an amazing plan and succeed or fail, which is looking like, it's looking real iffy for Carvana. But at the same time, price action never lies. And I could still see this stock popping and making people lots and lots of money if you play it right. Meaning Carvana is at $8 right now. I don't believe it's just going to, even if it come down to 7, 6, 5, 4, 3, 2, 1, at some point from here, I don't believe it's just going to go down to $0.00 and poof and go away. I do believe it's going to be a major pop, probably a few pops before it actually dies out, if that was the case. So you already know what to do, guys. I love you. Add your boy on Instagram at the B Hayes Show, and we